Investing in UK property when there's a recession and prices are falling. Do you invest now, or do you wait 6 months or 12 months for prices to fall further? Well, in this video, I'll share with you some of my thoughts. My name is Ranjan Bhattacharya. I've been investing and developing properties for over 30 years. I also run the Baker Street Property Meet, the UK's largest networking event for property investors. Since 2003, I've been coaching and mentoring thousands of property investors achieve financial freedom through property investing. If you're new to this channel, make sure you subscribe and hit the bell icon so you get notified each time we release new videos. We put out videos each and every week, all dedicated to helping you be more successful in property. Also, smash that like button. It really helps us out on YouTube, and I thank you very much for that. So we come out of COVID-19 and into a property recession. If you haven't seen my video where I talk about my views on property prices after COVID-19, make sure you watch this here and then come back. And I've also done a video on how to invest in property after COVID-19, where I share with you my 5 essential steps for successfully investing in property in the current market. So if you haven't seen that video, watch that too and then come back here. So if you watch those 2 videos, you'll know my views. Basically, in the short term, we're heading for a recession, property prices will be down, and there's going to be no sign of any recovery until the job market picks up. And that may be 2 to 3 years away. And my 5-step guide for investing in property during this time is really, number 1, make sure you buy from motivated sellers. Number 2, always buy distressed properties. Number 3, only look for opportunities where you can add value. Number 4, look for opportunities which generate positive cash flow. And 5, with real long-term capital growth potential. The times we're living in are unprecedented. The direction of travel for property prices in the short term is downwards. So under that backdrop, do you invest now? Or do you wait for 3 months? Do you wait 6 months? Do you wait 12 months before investing in the property market? The last thing you want to do is sink a lot of cash into a property deal only to find that in a year or so's time, you could pick up the same property for less than you paid. So if you want to invest successfully today in a deal right now, I recommend you follow these 3 additional rules. Number 1, whatever you buy should be capable of generating immediate positive cash flow from day 1 of doing the deal. Not after spending thousands of pounds on refurbishments and all that sort of jazz, but day 1 positive cash flow. Number 2, tie up the minimum amount of cash in each deal that you do. Remember, cash is king. Once you've spent it, it's all gone. One thing you don't want to do is tie up tons of cash in a deal only to find out that there's a better opportunity 6 months or 12 months down the road. So to ensure you tie up the minimum amount of cash in the deals you do, you've got to get extra creative. You've got to get extra creative in the way you structure the deal and the way you present your offer to the vendor. And number 3, maximize your ROI, return on investment. For every deal that you do, make sure you generate the maximum return on your investment for the cash that you're tying up. Your ROI is basically your annual positive cash flow divided by the money that you have invested in the deal, expressed as a percentage. If you're doing a deal right now, my rule of thumb is that your ROI should be in excess of 40%. 40% gives you a terrific return on the cash that you have invested in the deal and also insures you against any short-term market downside. So if you're doing a deal today, what I'm saying is you must produce cash flow from day 1. You must do a deal that ties up the minimum of your cash in that deal and produces the maximum return on the cash that you invest in that deal. So let me share with you a simple little example. I spoke to a good property friend of mine yesterday who told me he's had an offer accepted on a pub building that he's about to buy. Now this is from a vendor in his 70s who's retiring It's basically a motivated seller found through direct-to-vendor marketing techniques. Again, I talk about these in other videos and I'll link to some of these here. And what made him want to do this deal right now is the fact that it's very, very creatively put together and it ties up the minimum of his cash and produces a decent cash flow. So let's just run through it. The structure of this deal is very simple. It uses a creative strategy that we call delayed completion. So his offer to purchase the property involves exchanging contracts with a very, very low deposit. The delayed completion element means that he doesn't actually have to complete on the purchase for 3 years. So exchange today, if you like, with very, very low money down. Completion can take place at any time over the next 3 years. The pub has a number of lettable rooms sort of above the commercial premises, which are lettable from day one, thereby producing a healthy positive cash flow, which produces a great return based on the initial outlay of the deposit he's having to put down to do the deal. The upside comes because the commercial property has a lot of planning gain opportunities. His end game is basically to apply for planning permission to redevelop the site. Once that planning permission is secured, that will uplift the value of that site significantly, and that allows him to raise finance at that stage to complete on the purchase of the property, which will not require any further funds to be invested. So you can see how a deal like this is worth doing in any market. Plenty of long-term upside with redeveloping the site after planning permission is secured. But for the outlay of cash today, which is just a small amount to exchange contracts, there's immediate cash flow generated from the lettable rooms, and there's a great return on that cash invested. To do creative deals like this, it obviously requires a little bit of knowledge. Yes, you go out and meet vendors and you go and find out why they want to sell a property, but for you to be able to structure an offer that's a win-win for both parties, that requires a little bit of knowledge. If your investing game is dependent on having a stash of cash in the bank, then guess what? After a deal or 2 or 3, your cash will run out. Then where do you go from there? But if your property investment game hinges on creativity, putting together creative deal structures that allow you to put in the minimum of your cash into each deal that you do, then that is an investment strategy or an investment methodology which is repeatable and scalable and allows you to keep going forever. What I've found over the years is that these sort of creative strategies work best on commercial buildings and mixed-use buildings because you're dealing with commercial vendors who are generally more commercially minded and business minded than owner-occupiers of residential properties. And over the coming years, there's going to be massive oversupply of commercial buildings, which is one of the reasons the government have introduced so many permitted development rights, which allow you to repurpose commercial buildings to alternative uses. So right now is absolutely the right time to get skilled up on creative strategies and all the different ways that you can repurpose commercial buildings to alternative uses. Because over the next few years, there's going to be a glut of opportunity as more and more commercial buildings come onto the market and will be ripe for repurposing. If you want to find out more of how you can find commercial buildings, how you can fund them, how you can fill them with tenants, how you can repurpose them to alternative uses using permitted development rights, how you can best use your pension to invest in commercial properties, how you can negotiate these sort of creative deals with vendors and get them to accept, then you may be interested in attending my unique commercial property training course. To find out more, you can visit bakerstreetworkshop.com. We've got a special discount code that applies. If you enter the code Ranjan, that will entitle you to £700 off. But visit the website, check out the videos on there, check out some of the testimonials on there, check out the agenda on there, because I believe this is really the best strategy for the next few years for being successful in property. Hope to see you at a following workshop. Make sure and check out some of the other videos that we have on this channel too. Bye for now.